should I pay $400,000? Should I pay $500,000?
Don't negotiate on the price. Get a seller concession.
You heard it here. You got to watch this episode of Really Mary or read the blog because we want to see you getting a seller concession here in paradise.
Really, Mary?
Welcome back to Really Mary. I today am with my dear friend Cheryl Stokes from New American Funding, and we are going to talk about a subject that comes up a lot. Cheryl,
It does.
Components of a good offer in a buyer's market.
Yes.
Right. I mean, there's
right now that's everything.
And we're going to talk on 5. I have to count them on my hand. 5. We're going to hit on some of them pretty fast, and then we're going to go deep. So let's talk about flexibility of the offer. We're going to come back to that. Inspections, come back to that. Terms, mortgages, what does that look like? And then price negotiations versus seller concessions. And we're going to go deep on the mortgage and the price negotiation. So flexibility, Cheryl, we came out of that crazy seller's market and you put it on and you had 10 offers.
You had 10 offers. You had no flexibility. They definitely wanted a large earnest money. They wanted a quick close. They wanted cash if possible. The sellers could pretty much write their own ticket.
Yeah, we're not there.
We are not there.
So that gives you a lot of flexibility. And with that flexibility, there are things like inspections. Like during that time, Cheryl, nobody could get an inspection. I mean,
No.
Who in the right mind buys a house without an inspection? And yet people were doing that.
We did it all the time. And price escalations.
Yeah. Yeah.
So because there was such competition in the market.
And, also mortgages, like they would waive their mortgage contingency.
They would. And, for us as lenders and even title companies, that's something that we cringe at because life happens. And
Right.
that contingency is your fail-safe.
Yeah, exactly. So good news is if you're a buyer listening to this, you have a ton more flexibility. Now, we just hit on inspections that in that day, people were waiving them. Mm-hmm. You should get an inspection.
You should get in an inspection, and that is a point in which then, if you found something wrong, the sellers were not going to fix it. But now,
Right.
That's a point of negotiation.
That's right. And, it's something interesting because there should be a seller's disclosure. I hope all sellers are doing that, that no one requires it. But then you can kind of get a flavor of what's happening in that house or has happened in that house. And that can help you decide on what you want to do with an inspection. Now, interesting enough, Cheryl, the new condo form and the new flood, let's put the new flood disclosure, now talks about, for condos specifically, if there were any flooding that happened on the property, and that includes the main area, the pool, etc.,
Right.
while you owned it, because, buyers should know if something like that happened and if there were special assessments or, what in the world happened.
You should know that in the past. For a condo or a home, you need to know if that house is ever flooded because floods tend to create internal damage that you might not know about.
That's right.
Number 1. And 2, it affects your insurance rates. So you need to know if there's been a flood.
Absolutely. The new form has that. So make sure that your agent is putting that in front of you. Terms. The sky's the limit with you as the buyer.
It is. So back in the day, we'll keep going back and forth. They wanted as quick a close as possible. They weren't flexible. Sellers weren't flexible on terms at all. Now, if a seller's house has been on the market for, 240 days, and a buyer needs a 60 or 90-day close, they might just do it because their house has been sitting. So you have flexibility in those terms. Maybe you do a pre-occupancy. I mean, there's all kinds of ways you can be flexible on terms now.
That's right. And didn't we just do one of those in Fort Myers? Didn't just you and I?
Pre-occupancy?
No, not the pre-occupancy, but
a longer term.
A longer term. Yeah, I mean, pre-occupancy, post-occupancies, those are things that in the day we would say no way, no how. And now it might make sense. You want to make sure you understand that when you're putting that offer in.
Right.
Okay, so we're not going to talk about rates because everybody's sick of hearing about rates. But let's talk about mortgages where it comes to different types of mortgages. So condos, non-QM, which is kind of a buzzword that I use that I really don't know what it means other than it's special.
So non-QM is non-qualifying mortgage, which means outside the guidelines of Fannie and Freddie loans, standard conventional loans, outside of FHA, VA, or USDA. It's a standalone type of loan. And they tend to be what some people consider riskier loans because their guidelines are different. But they offer that same flexibility that buyers are looking for. So part of the problem is homes are staying on the market for a long time, but affordability is still an issue because those rates that we're really not talking about haven't moved like we thought they would. So non-QM loans allow you to create financing where maybe you don't fit in the Fannie Freddie box.
Okay.
So that goes right along those flexibility lines, and it's something that buyers should consider. Maybe life happened and they have a derogatory credit item that would prevent them from financing with Fannie and Freddie, but a non-QM loan will allow them to. I mean, they've fixed whatever the problem is. They're starting anew. They should have the opportunity to buy as well.
Yeah.
Or maybe you're self-employed and you do what everybody does and you report your taxes legally in the way that you should, but you really need a bank statement loan to show your income.
Right.
Those are types of things that non-QM provides that ties into the need for flexibility and affordability in mortgages right now.
I love that. So that, and we actually have a lot of clients that you and I that do that just because they're, they don't have a, employed by an employer.
Right.
They have their own businesses, they're investors, et cetera. Lots of reasons.
Lots of reasons. Here's a simple reason that you wouldn't even consider. Let's say you're retired. You're on Social Security. You have a fixed income.
Yeah.
But you saved your whole life and your 401k has $2.5 million. But that's not income. That's an asset. So a non-QM loan option is a loan based on your asset qualification.
That's a great distinction because, I know many of our listeners are going to have that situation because we do get a higher retiree kind of population down here, second home, et cetera. And they've got assets sitting in that 401k.
Right. And their financial planner, and rightly so, is say, do not pull those funds out.
Right.
You need them for your future. But those are ways that we can get you qualified that are outside that Fannie Freddie box.
Right. You also have some other things, too, that you've done with some of our clients in the fact that you use their house as their current house as an asset. I don't know if that's in that non-QM or not.
It is.
But you have another word for it.
Right. It's a bridge.
Yeah.
So
Flavor of a bridge.
Those were quite popular way back. They kind of went away and they're back again. But you can utilize a house that you're selling as a bridge to purchase your next property.
Right.
And basically we determine what the payoff on that house is, what the house value is, how much we can bridge over to you to purchase the next home with a loan. And then you pay that bridge loan back when your house sells. And you have 12 months to do it.
That's amazing. That part of it is a pretty special part because we have used that in the past and it's awesome. So if you haven't explored that and you've got a home you're sitting on with a bunch, bunch
of equity.
Yeah, a bunch of equity. Why not?
Right. And it really is, again, it's about flexibility, affordability, and how do we create the possibility of people moving forward with their lives and the homes they want to buy in a not ordinary market.
So one last topic on this mortgage before we go to seller concessions versus price negotiations. Condos. Condos are an interesting bird right now.
They are. So the thing that a buyer needs to understand with condos is there are a lot of new rules and regulations. There is a lot of flexibility in selling because frankly, some people are trying to get out of the condo market because of the new rules and regulations and assessments. So buyers should really be aware of all of the criteria surrounding a condo. When they're buying, they should get all of that information up front. Has there been a flood? Are there special assessments? Has there been a structural review? But again, sellers are going to be very flexible because they are aware that all of these things are happening. And if you want a buyer to come in and purchase your property, you have to be flexible on terms, etc., because there's so much more criteria that you have to follow to purchase a condo with a mortgage now.
Which is so right, because let's think about this. Now, all those documents that you just mentioned have to come with the condo. Now the state allows for basically a 7-day inspection to review those documents, and they can't count the weekends. So you're really looking closer to 9 days, and no holidays. That's a lot. And if they want minutes or something and they want extra, that's not included in this document, to go down that path. So as a buyer, I need to be aware. But then as a lender, for me as a buyer, there are a few other hoops that you have to go through.
Right, because we also have to review them.
Right.
And that's a thing that sellers need to understand, and why you might consider on a term with a condo for that contract term to be longer.
Right.
Because for us to get those documents, we have to specifically request them from the HOA. Every single HOA is different in the amount of time that they will allow themselves to give the lender the documents. It could be 5 days, it could be 15. Well, on a 30-day contract, if we do not see these documents, if we order them on day 1, which it would really be about day 3 in the process, and we have to wait 15 days, and we get it on the 16th day, we're now 19 days into a 30-day contract before we even see the documents to determine if the condo is approvable.
Right.
That's a long time in mortgage world.
Right. And if they can get you all the questionnaires and things.
Correct.
Right.
And HOAs are not, I hate to sound like a negative Nelly, but they're not excited or quick about doing this. It's tedious for them. I totally understand. But we're trying to do the buyer a good service in not only qualifying them for the purchase, but qualifying the building and the HOA. This is an investment for you. You want to know that you're making a good quality investment.
Absolutely. We just had a situation recently where we were the listing agent and the buyer's agent, and we could not get the condo association to get us the documents that were filled out properly. They were improperly filled out, and the buyer couldn't go forward. Right. Now, if I can finally get them filled out properly, he is still interested in the condo. But that's a little bit, that's a problem. So the listing agent has to make sure that they take their job responsibly and get those documents and pulled together. The buyer's agent, when they put the offer together, needs to have the buyer talk to a lender to understand what kind of loan am I going to get, and is this going to be a quick or not? Kind of loan, because some of them are happen quicker, right?
Some happen quickly. It really is very dependent on the HOA themselves.
Right.
Some are right on the spot. They have property management that is quick and efficient, but some are self-managed.
Right.
And they have someone who works in the office an hour a day.
Yeah.
So you really have to be prepared ahead of time. And what I tell listing agents is, do all this homework when you take the listing.
Right.
And what I tell buyer's agents is, ask this first before you even show the property.
Yeah. Yeah. Smart.
And that way you're ahead of the game and doing the best work you can for your client.
And as a buyer, if you're listening to this, you definitely want to work with a great lender like Cheryl, because, especially a local lender that knows the buildings and knows the area and the ins and outs of that, because as you start to go down a national lender, it becomes a little bit of a nightmare.
It really is. And it's, I'll defend them a little bit. It's not because they don't want to be a quality lender, but if they're not familiar with our area and they're just running down the checklist of the requirements, they don't understand the flexibility needed. They don't understand the situation on the ground here. It's just better to have someone who's knowledgeable in the area.
Nice. Now, I know you've all been waiting for this, because this is how we're getting you to watch the entire video or click forward to this part. But this is price negotiations versus seller concession. Cheryl, we have a document that you'll be able to ask for when you watch this or read the blog. But I think this is probably one of the best cheat sheets that you have ever come up with.
It's my favorite, and even I have to read it because there's a lot of information here.
Right.
You can't memorize it all. But this document, to me, in a buyer's market, can make or break a deal and can really help a buyer who's on the fence, on either qualifying or on the fence about making a decision to buy with affordability, because it's still an issue, this is huge and will help buyers every day.
So let's kind of take this back because you nailed it. So we've talked about this in the past, affordability. A price may not make sense. So let's use $500,000. I'm buying a $500,000 house, and we've negotiated to like $480,000 or something.
Right.
That price I've negotiated to, I might pay them more and get concessions back, which would help my affordability. Is that the way it works?
It is, and that seems counterintuitive because I'm going to go. It's like I'm going to go buy a car. And I am going to negotiate with that dealer all the way down,
right,
as far as I can go to get that car at a better price.
Right.
Well, on a car, you're paying simple interest over 5 years,
right,
6 years. On a mortgage, you're paying over 30 years.
Right.
And that difference in price from $500 to $450, take that $50,000 and we can do the math, but do the math, divide it by 360 months.
Yeah.
You're saving this much money per month by getting it down $50,000.
How much?
$20,000.
Like a cup of coffee.
Right.
Cup of coffee a day.
Right. But if you ask the seller for a concession, and let's say you ask for 6% back on that concession, let's do the math. Let's make it easy. 10, let's make it 5%, $25,000.
Okay, thank you.
Let's do easy math in,
I like
in
that.
our heads. So you get $25,000 back.
Right.
For closing costs and prepaids. So what does that mean?
Yeah.
Well, now your closing costs are most likely paid in full. Your escrow account is most likely paid in full.
Which is your insurance and your taxes, etc.
Your first year's insurance is included in that. That's most likely paid in full. Mm-hmm. And you probably have a little bit left to buy the interest rate down. Now, why does that matter? Buying an interest rate down, even 0.25% will make a $200 or $300 difference on your payment. Again, depending on the numbers, I could do the math for you.
Right.
But could make a $200 or $300 difference on your mortgage payment versus the $25 by negotiating the price down.
Right.
And what you really need to do with the buyer and the lender and the agent as a group, you have to make a team effort. My buyer qualifies for this, but would really like to get here for their comfort level. Remember, it's not just what do they qualify for.
Right.
You don't want to take a buyer to the absolute max that they qualify for, and then they can't live their life.
Right.
What is the
horrible
budget where they want to be to live their lifestyle? Yeah. How do we back into that? And a lot of times a seller concession will be the way to back into their actual goals.
That's wonderful. So Cheryl, I'm going to pretend, well, I'm pretty important. I can buy this for, whatever. I don't care. Should I?
I advise every single buyer to negotiate a seller concession because why not?
Because why not?
It's a buyer's market. That's right. Why not? It doesn't matter how much you make or if you qualify at a higher amount. Did you find a property that you like?
Right.
Is there value there? And is the seller motivated to sell the home?
Right.
And maybe that sounds wrong, but for me, I feel it's my job to advise my client to make a good financial decision.
Agreed.
And it's always a good financial decision to save on that monthly payment if you can. And this is a really great way to do it. Yeah. That at the end of the day, it benefits everybody. The seller gets their home sold. The agent finds them a great property. The client finds the property they love that they can afford and they can still have their lifestyle.
Right.
And we put it all together. We've put all the puzzle pieces together and we did something great for our clients.
Yeah. So this is the seller concession cheat sheet. You want to hold yours up? This is pretty cool. You've broken it down by conventional, from an investment or a secondary primary home, FHA, VA, or USDA. This document will be available to you. So just, follow the instructions. They're going to tell you how to get it. But I really think this is awesome for anybody looking to purchase in a buyer's market.
Right. And remember, it's for investors too. Investors can get 2% on a seller concession. Well, 2% buying down the rate, that gives them more ROI from day one than they would have expected. So these concessions are between 2 and 6%, depending on the type of property, the down payment amount. Those all make a difference. That's why you have to have the whole list. But at every point of the way, there's a way for you to get some concessions and benefit yourself as a buyer.
So this is something we're going to give to you, but, the best part of it is talk to Cheryl. She knows what she's doing. I'm going to just blatantly say, talk to Cheryl. Yes, you can talk to other lenders, but talk to Cheryl when it comes to this here in Southwest Florida, because she can help you find out the best way to purchase property.
Yeah, let's get you into a home and let's make it affordable. That's my mission in life, is making home buying affordable for people.
Love that. So until next time, I'm Mary Bartos with the Bartos Group.
Cheryl Stokes, New American Funding.
And we look forward to seeing you here in Paradise, getting some concessions.